Are you struggling to calculate your net operating working capital? Here are the steps to find it. First, determine current assets on your balance sheet. These are assets a company can efficiently and quickly turn into cash within only a year. For example, accounts receivable, prepaid expenses, and inventory. Identify current liabilities on your balance sheet. These are the debts or bills your business needs to pay back in 1 year. For instance, accounts payable, accrued expenses, and any short-term loans. Now it's time to exclude cash and its equivalents, since cash and its equivalents do not really contribute to a company's daily operations. They're usually excluded from net operating working capital. Calculate NOWC. In order to determine the NOWC, consider the current assets, excluding cash and similar items, and deduct it from current liabilities. Remember, you need to exclude any short-term debt that funds the current assets. We will understand better with the help of an example. Let's say the accounts receivable of a company is $30,000, along with its inventory, which is $20,000. In addition, the accounts payable is $15,000. Now operating current assets are $30,000 plus $20,000, which adds up to $50,000. Moreover, its operating current liabilities are $15,000 accounts payable. So, we can easily determine the NOWC of the business is $50,000 minus $15,000, which is $35,000. For more information on net operating working capital tips, visit www.theledgerlabs.com.